Joy and I are super passionate about helping people. We love what we do, and we're just excited to be in front of you this evening. So a little bit about me. I am with Penzone Realty, which is located in Glassboro, New Jersey. I am a licensed real estate agent I'm a licensed real estate agent in New Jersey and Pennsylvania. My experience is with commercial real estate, residential real estate, and even project management. So I even have experience with custom building homes for clients, from the dirt up, as you would say, and then all the way to actually decorating their homes and handing them the keys and them being able to sleep in their home for the very first night. So I do have design experience as well in regards to custom built homes. So my experience is from beginning to end, whether it's commercial or residential. I'll turn it over to you, Joy.
Thank you. My name is Joy Marsteller. I work for Cross Country Mortgage. I've been in the industry now for over 20 years. At Cross Country, we specialize in residential lending. We do everything. We have a product for everyone and anyone. So if you don't think you can qualify, you probably can. I'm licensed in New Jersey and Pennsylvania. However, my branch is located in Mullica Hill. My branch is also licensed in Florida and Delaware. So I can do loans also in those states as well.
Perfect. So Joy and I have been working together for a little while, and I just love Joy. I mean,
I love you.
She is this is like, for us to do this with you tonight was like, this is what we do every day. So we thought, let's do Instagram Live, because recently we've been getting questions around the grant money and becoming a first-time home buyer, and questions in regards to, like, where do I start? Some people are ready, they just don't know what's the first step that I take. So we thought, let's do Instagram Live, because if other people have questions, there may be more people that have questions. So that's where we just thought we would try to do this live for you guys, and you will let us know the feedback. And then what we thought we would do, because we promised we don't want to hold you long each night, so we broke it up into 3 different segments over the next 3 weeks. So the first week, we thought tonight we're going to cover is the very first step, right? That is credit scores. What do the credit scores mean? And as lenders, what's the credit score number that they're looking for? So Joy's going to cover that. And then also she's going to cover about the grant money, because there is a lot of money available in whether you're in Pennsylvania or New Jersey, and she'll go over the qualifications for that and how easy it is to qualify for it as well. What I do is I just gather the basic information, and then I pass the client over to Joy, because I cannot show my client homes until Joy tells me what's the price range that comfortably the lender would agree to loan the money with, right? So right away, Joy's going to ask you a couple questions.
I do ask them about their credit, what's going on with their credit scores, if they know their credit scores. Let's go through credit. So, I mean, phenomenal credit, 800.
Okay, that's like,
okay.
Yeah, that's phenomenal. Okay.
800 to 740.
Okay.
Then, under 740 to like 700, that's still good credit. Then 700 to 780, you're still good. 70, like now you're under 680, it's still good, but it's not the best to go conventional. You're probably going to go FHA now. Now you're at like 640, so that's fair. Okay. 620 is okay. 580, I mean, you could still maybe get qualified, but that's pretty fair. Anything under 580, you probably are going to have to work on your credit.
Okay. So
now, it doesn't mean you're not going to get approved. At Cross Country, we do go down to a 500 credit score.
Okay.
But it is, a case-by-case situation. Everything, I think with credit, everything is case-by-case.
Okay.
Everything's the whole picture.
Okay. And that's good to know. It's not like, because sometimes people don't know, and so they may think if they aren't at this specific number, then they're not going to get approved. And the key thing, I like what you said, is a case-by-case scenario. So I figure, if everyone on the line, you've done the hardest part, and that is making the first step. The first step is picking up the phone and asking the questions. You've already done the hard part. Now is, okay, let's see where you are, so we'll know what the second and third and fourth step is. And so I think that's really good to know. So, right. So, you know, so at minimum, if it's five in the 500s, there's still an opportunity, and you obviously would tell them what the first and second step is
Right.
based on
And
that
I
credit
always
score.
do.
Okay.
You
So,
know, and if you don't qualify, I get you on a plan to qualify.
okay. Oh, okay. I like that. Now let's go back to the credit score. So if they do know it, that's great. They already have an idea what you might say before speaking with you. And if
Right.
they don't know, and if they do, if they're on the call right now and they don't know their credit score, but they want to have an idea before they start the dialogue with you and I, what service would you recommend for them to look at to find their score?
The services online, do not like Credit Karma. Everybody's like, oh, I looked on Credit Karma and my score is this. Credit Karma and mortgage scores are completely different. Credit Karma is usually 30 to 40 points higher than a mortgage score. So Credit Karma is good to look at your credit to make sure you don't have any late payments, you don't have any collection accounts, but it's not really good for reporting your scores. What keeps your scores down are late payments. You want to make payments on time. Collection accounts. You want to you're not having anything go to collections. If you're getting those medical bills or those credit card bills in the mail, you want to try to get on a payment plan before it goes collection. And the biggest thing, well, that's one of the biggest things is the collection and the late payments. Your credit card balances. You do not want to max out your credit cards. You want to keep those balances low because that actually increases your scores as well.
Okay, so just make the minimum as long as they're the minimum, as long as they're on time, and do your best not to max out the limit.
Yes.
And try to minimize it and get it lower as you possibly can without keeping it maxed out.
Yes.
Okay. All right. But once again, it doesn't mean you can't get a loan.
It doesn't mean you can't. It just all depends. It's a whole picture. Pre-COVID, we used to always request transcripts for tax returns.
Okay.
Since COVID, that has stopped.
Okay.
If you're not self-employed, we don't require that. However, we're going to talk about that when we get to the grant program. Tax returns are required on the grant.
Okay, for the grant. But if we were going, if a client was
if you're doing a regular loan, you're not self-employed, we are not requiring tax returns right now. I don't even look at tax returns if they're not required.
There is grant money available, and I don't think a lot of people are aware of this. And so that was another reason why Joy and I were so passionate about having these Instagram Live with you, because we do want to help people and we want you to know. And if you qualify for it, I know Joy would love to help you with that. And so I'll let Joy take it from here.
It's called NJHMFA, Down Payment Assistance Program.
Okay.
It's for any first-time home buyer. Does everybody know what a first-time home buyer is considered? You're considered a first-time home buyer if you have not owned a home in the past 3 years.
That's good to know. Okay.
Yeah, that's how you're considered a first-time home buyer. So, and you have to be buying a primary home. A primary home means you're going to be living in the home. And you have to occupy the home within 60 days. And you have to meet the credit score requirement for this program is 620. You can receive a $10,000 grant from the state of New Jersey. It is, you do not have to pay it back. However, you do have to stay in the property for 5 years. If you sell the home or refinance in the first 5 years, the state will require you to pay back the $10,000. And there is an income limit. The household income cannot exceed $148,400.
148,000. 400 as a combined family income.
Combined family income.
Okay.
I mean, that's the kind of the gist of the program. I mean, you have to show that to the state that you have 1 month of your mortgage payment in like your checking, your savings account, your 401k at the time of closing. And the other thing we talked about tax returns, you do have to show that you filed your tax returns for the past 3 years. So depending on whatever year you purchased, you do have to have 3 years of tax returns. A lot more people's offers are getting accepted using this program.
Okay.
So we just need to plan accordingly.
Right. And that's good. I mean, if those are really the only two qualifications, because most people are going to be in their home. Because when I tell people they have to be in their home for at least 5 years, I'm like, of course I'm going to be in my house longer than 5 years. But you never know. You know, you may get transferred for work or something. And so talk about that. So if for some reason they do get the grant money and they have to now move out of state and sell their home because they got transferred to a different job. So how would that get paid back to the state if that happened?
When you sell your house from the net proceeds.
Okay. So, right. So it's not like they would have to take it physically out of their savings or their pocket. It would just come off the top from the sale of the home. So
Yeah.
once again, it wouldn't come directly from their pocket.
So if you have any collection accounts, they do have to be paid, and you can pay them at closing. Where
So go ahead, walk us through that.
if you have a collection, if you're getting a regular loan, for instance, if you have a small collection on there for $400, we don't require that to be paid, but the state does require collections to be paid.
So let me walk through. Okay. So if it was the first scenario, if you weren't not taking the assistance program, if it was a regular loan, FHA loan, then you would not have to pay that back. But if you do want to take advantage of the grant money, then they do want those things paid off. But the good thing is what you just said, you can just do that at closing.
Yeah.
So that's not something that someone would have to go into their savings, pay these little things off, and then come back to you. This is all handled at the transaction of closing.
The down payment assistance to pay the collections, you have to use your own funds, but you have the time to save up to pay them.
Right. So it doesn't have to be done ahead of time. It could be done at day of closing. Okay. Because typically, from the time it takes, just say hypothetically, and we're going to go through this in the last case scenario, so I don't want to get ahead of ourselves. But typically, to kind of give people an idea of how long the process takes, if we had you approved, Joy tells us what your budget is to find your house. Then it takes time to actually find the right house. Sometimes it takes a short amount of time. Sometimes it takes longer. But the key thing is what Joy said. Then the longer it takes for us to find the right house, then that still gives you time to continue to save, to put that money to the side. So to pay those smaller things off at closing. So once again, that's what she said. It buys you more time as we're looking to try to find you the right house, if that makes sense. Did I explain that right?
You did.
Okay. So what other questions do you guys have for us? What didn't we explain well that we could explain better for you? I just think that it's a phenomenal thing of having that grant money.
I have somebody that's buying 175 right now. I think he's bringing 3,000 out of pocket.
That's huge. That's huge.
Maybe 3,500. It's minimal.
Right.
Bringing out of pocket.
Right. That's huge. And that would include what you said earlier. I believe you said that you had to show in the reserves that you had at least 1 month
reserves. So he has 3,500 that he has to bring to the table for his closing.
Okay.
Then on top of it, his reserves.
Okay. Okay. Got it. Okay. So it's the 35 plus the 1 month of mortgage payment.
Yes.
Okay. Got it. Okay.
But the 1 month of mortgage payment, he just has to show that in his bank account.
Got it. So he's not bringing it and giving it closer. He's just verifying that he had it set aside.
And you can use your retirement account for that too, where you don't have to touch it. You just show that you have the money somewhere. You can purchase a duplex. Is that what you're asking?
I think so. I think that's what they're asking.
Multifamily up to 4 units.
Okay. And that's for the grant money and for loans, or what's for up to 4 units? Okay. So the grant money can be up to 4 units.
You just have to live in one of the units if you're buying a multifamily.
Awesome. Thank you. I didn't know that one.
Mixed use is a little tricky. It depends on the property.
Okay. So once again, once you have the address, we found the property, then you could do and give a appropriate answer based on the research of the property location. Okay. Awesome. Thank you. Well, this has been a blast, you guys. I've had fun. I was a little nervous because we enjoyed this. Want to make sure that you found this valuable. Let us know, how did we do with the 2 topics for tonight, and mark your calendars, your alarm for next Tuesday, 6 p.m. for part 2 of the series, and we're going to talk all about the different loan types and what you can do with them, and all the different qualifications. So once again, you're going to be pleasantly surprised again next week with all the different options that are available to you for loans, whether they're fixer-uppers, not fixer-uppers, everything is available to you. Anything else you want to add before we close out, Joy?
No, I'm good.
Okay. All right. Thank you guys so much. Love you guys.
Bye.
See you next Tuesday at 6 o'clock. Good night.
Bye.